Hi, good morning, everybody. It looks like we have attendees entering our presentation today. So going to give this just a few more seconds so that we don't really get going and have a lot of people miss it. However, thanks to everyone who's joining in today. Okay, well, it looks like our attendance numbers are starting to stabilize, so we can get going here. Once again, thanks everybody for joining us this morning. Here with Joe McDonald from Captives Insure, and
Morning.
going to have some discussions on captive insurance. So hopefully that's something that you're pretty excited about, or have heard about, or have an interest in. Before we really get cooking, we'll go through a few housekeeping items here. The first is there is CPE offered for this webinar. There's a whole lot of things listed here regarding compliance for that. Probably the short answer for this is that in order to get that CPE, you have to be in the meeting for at least 50 minutes. You have to answer at least 3 of our 4 polling questions. But now you notice it doesn't say answer correctly, and the joke's on you there because none of the questions we asked have right or wrong answers. So should be a layup there on CPE. Um, and beyond that, there's some logistics here listed on when you'll get those certificates. Those generally come within 7 days. Those will arrive by email. And at the end of the presentation, there'll be a survey. Joe and I would really appreciate it if you would fill that out. That feedback is really helpful to us in sort of understanding what people liked, maybe what was some areas where we could add a little more information or touch on a little more, or other areas of interest, areas where you'd like to see us go a little deeper next time. So, if you wouldn't mind, just take a few extra minutes and complete that survey. We'd really appreciate it. The program description here that hopefully was kind of the hook and got you in this webinar to start with is on this slide. Once again, just to give you the Cliffs Notes version, Joe is a captive industry veteran, and very excited to have him here today. And really, what we put together is what we hope is a very interesting discussion on captive insurance, and a lot of this being about going from some of the conversations that either spark people's interest in it, or just sort of that initial touch or initial introduction into captives, into really kind of the blocking and tackling of what are some solutions. One of the things you'll notice in this slide, there's a word absent, and we may touch on it a little bit, although the goal of this presentation is not to have it sort of dominate our conversation, and that missing word is tax. Obviously, there's a lot of people that find out about captives because of tax, and we will inevitably chat about that. However, this is very much focused on the captive insurance bit of it. So, in terms of technical details, we're not really going to go super deep into that. However, I think you'll still hopefully get a lot of value. And also, not on this slide, this is intended to be a discussion not just between Joe and I, but also with you. So the Q&A is open. If you have questions or things like that, we'll be watching the Q&A. Those on the call that know me well know that we're rarely lost for words. However, we are going to be keeping an eye on that. We want to know your thoughts. We want to know your questions. So that Q&A is the best place to go. I believe the chat is turned off. However, that will be our best venue. And then I think finally is just a summary of the learning objectives. again, the quick answer here is sort of, as we described in the program description, is this is this is this is about the conversations, about how these things come up, about how those conversations should go, who's having these conversations, what we should be thinking about as those conversations are happening. And then, moving from conversations to data and moving from data to action. So, with that, I think we'll start off with a polling question, just to kind of get things warmed up and see who and where you're coming to us from, as we approach this webinar. So, um, I love it. The results are already rolling in. While we're looking at that, Joe, how are you this morning?
I'm well, Scott. Thank you. Thank you for having me. Really, really happy to be here. Yeah, and great intro to all of this and getting the housekeeping out of the way. I appreciate the administrative side. You taking care of all that for for the discussion this morning.
Great, great. Well, we're starting to get these results rolling in, and we've got a pretty even spread here. Surprisingly, there's about 30% so far from financial services, and I would say that probably could be anywhere from insurance to banking. It's intentionally a little bit broad. Potentially, maybe some regulators in attendance who are in there. 10% from commercial services, construction, manufacturing, things like that. That's really interesting. 26% from not-for-profit and that industry. So that is very, very intriguing. I hope there's something for you folks out there. And then 34%, 32 people from professional services. So again, broad bucket, really interesting there. Yeah, we're excited to have all of you on here. I've got about 90% participation, so I'm gonna hold it open for just a couple more seconds before we sort of cut it off, before we have to cut and run and move on to the juice. So, all right, almost there. Any final thoughts here? Last call on this poll. Right. All right. Just for all of you who are on here, you can kind of see what I'm seeing there. And now with that, I think we'll keep it rolling, Joe. So, for those of you who don't know who I am, I'm Scott Bailey. I'm an audit partner in the Raleigh, North Carolina office of CRI. I've been in the captive industry for what feels like an eternity. However, I would say it's probably about 12 years or so. And I'll tell you, Joe, the growth that we've seen in this area has been so interesting to watch. Especially when we consider some of the things that have occurred over the last 10 to 15 years in the captive space. So really excited to continue the conversation today. But more importantly, Joe, if you wouldn't mind introducing yourself to our audience.
Yeah, certainly. And thanks, Scott. I'm really glad to be here again. So I'm Joe McDonald with Captive Insure. We are an independent MGA with delegated underwriting authority across multiple carrier partners. And we work alongside brokers, captive managers, and operating companies to really design and implement practical captive solutions, right? Our focus is helping our clients understand when a captive truly makes sense, how it fits within their existing insurance program, and really how brokers remain central to delivering long-term value. Also, yeah, I was previously the director of captives for the Department of Insurance in South Carolina, so former regulator. So I hope there's some regulators on this webinar, and y'all all get some good things out of it. And again, appreciate Scott, you let me be a part of this and participate with this. And to your point, yes, in the past 10 or 15 years in the captive space, we have seen significant growth, right? Recently, I heard that one out of every $4 in I mean that is an insurance premium dollar flows through a captive, right? A couple of years ago, I heard another number is, one out of every three, right? So there's some range. I'm not sure exactly how to gauge that or determine that specifically. I know there's some really great reports out there done by a number of entities to determine that, but that's incredible, right? One out of every $4, one out of every $3, like whatever it is, that's a lot of premium dollars flowing through alternative risk, entities. So yeah, it's exciting time to be a part of the captive industry, and yeah, thank you all for
Well,
being
hold
here.
on to that thought while we get through the agenda here, because just real quick, again, as we said from the top, a lot of our discussion today is going to focus on those conversations, and we've sort of laid that out here and discussed it a little bit. But let's go back to what you just said about that every one in every four premium dollar goes through captive. How does that begin to happen, right? Like where is the genesis for this, and where do these conversations begin, that bring us to that point, right? I mean, understanding that, many years ago, bringing up the concept of captives, I think people were talking about as committing crimes or something like that, kidnapping or something. But nowadays, this definitely, when we walk into a room, we've reached the point where people are asking us instead of us talking to them. So, where do these conversations start?
Yeah. So I mean, they can start from a number of different places, obviously. And I think this slide right here, the phrase "a lot of noise," was the genesis of this entire presentation. Because it just seems that there is a lot of talk out there, and that noise really results in uncertainty, right? And again, I heard this phrase from someone else recently after actually putting all this together, from a very successful broker who said that in today's market, there's just, again, a lot of noise. And that is exactly right, because the market is saturated with so many voices selling solutions, right? And for brokers, I would say that, the captive conversation likely has already started. So whether you initiate it or not, I mean, I think you said this in one of our calls, Scott, but the horse has left the barn, and
Absolutely.
so for brokers, your clients are hearing about captives from whether it's competitors, carriers, private equity, industry peers, all of the above. Maybe even someone from a country club. I heard that once. They were getting ready for another tennis match, and heard from somebody on the bench, hey, have you ever heard of captive? Right. So this noise is coming from a lot of different places, and I think for brokers specifically, your value is not in avoiding the discussion, right? But in helping guiding it responsibly.
Exactly, exactly. And I mean, you'd really want ideally this conversation to start with sort of your core group. Yeah, every single one of us kind of has our core group of people that when something comes up and we don't know what to do, these are the people we call. It feels like more and more what we're seeing, in the absence of that broker discussion, is we're seeing people get that renewal notice for whatever coverage. I mean, really name your coverage. And the number just feels unpalatable or feels potentially, I don't want to use the word outrageous, but maybe that's the right word in some cases. And they're going to that Rolodex as it used to be, or really they're looking at those folks whose opinion they trust, and that could be, yeah, as you say, that could be a broker, that could be people who do what you do, or people who do what I do, right? This is people reaching out to discussing it sometimes even with competitors, because the reality is, you know even in instances where we compete, we're all aware of similar situations. We all tend to be facing similar situations in that regard. I mean, I've heard stories about a lot of captive discussions starting around, at lunch, at a peer group table, right, at an industry table, and this was for motorcycle dealerships, right? That's where it came up, and it really it started because one of the participants got their notice and nearly swallowed their tongue. So Yeah, I mean these conversations just seem to be popping up, and it seems like it's popping up a lot more organically these days as well.
Yeah, agreed, Scott. And I'll tack on there and say that I think our role as whether it's service providers, consultants, what have you, right, as the people who are being called, right, called on to weigh in the conversation. Say, hey, what do you know about this? This is your space. How, what am I supposed to be seeing here? I think often it's the opportunity we have, right, to create a moment of silence, if you will, in the midst of all that noise, and ask, like, what problem are we actually trying to solve with the captive? Because I mean, clients need that space and that filter because not every pitch, every captive pitch, if you will, aligns with the operating business of the insured, right? So how to begin to parse all of that and separate the wheat from the chaff, if you will, and say, hey, these are viable, opportunities, options, solutions for you, and these others aren't. And again, I think trusted advisors, including brokers, should continue to be part of that ongoing conversation.
Absolutely. And once again, you provided the perfect segue into the next slide here, where we are talking about, things. And, I think one of the things to think about here are what are the motivations and incentives of the folks that are having this conversation. Maybe setting aside, ourselves or, a particular client or things like that. But what are the motivations and incentives of the people that they're hearing from? Because as you say, part of the genesis of this whole presentation was, what are our potential clients or what are our current clients who are exploring captives? What are they hearing from brokers? What are they hearing from, this group or this law firm or, in my case, this CPA firm? Um, and it seems like one of the things that had been the early struggle in that model had been a lot of brokers who have had these long-term relationships with a lot of businesses or not-for-profit entities, various groups out there. They have these long, deep relationships, and you know, and they're figuring out how to broker these trades. So they're figuring out how to get involved where it seems like if we go backwards, perhaps 10, 15 years, that was maybe a more difficult proposition. Um,
Yeah, I mean, I think you're spot on with that, right? And just to maybe tie it in, so just to ask the question, right? What is the incentive for this transaction and for whom? I mean, fundamentally, I think everyone involved should benefit, right? If you do it right. Um, Insureds should benefit, brokers should benefit, consultants, advisors, and that's okay. And we're all in this business, to generate income and drive revenue and help our clients. I mean, all of the above. Uh, but if the transaction is transparent and aligned with the insured's values and goals, I think that's of paramount importance, right? And brokers can help in making sure that the insured always understands where every dollar goes, why the structure exists the way that it does in a captive, and ultimately what success looks like operationally. And I mean, I think
well,
brokers,
if I can get you
please,
and
yeah,
and
yeah,
and following that, you said it best as we were getting ready for this presentation, which was the know your why. And these people that are in that inner circle generally have a pretty good idea, number one, of why you're doing what you're doing, what you're trying to accomplish. Let's even setting aside the interest, like what are we trying to do? And then, how does the insurance relationship layer on top of that? And then as a function of that, how do captives help you do what you want to do, but better, right? And so it is about understanding all the voices that are coming around and and even taking the time to understand who has that knowledge. Who are you hearing from that can see your bigger picture or see that big picture but at the you level, for lack of a better word.
right. And what voices you you should be tuning into and those you should be tuning out.
Right.
And I think back to your statement about long-term relationships with brokers, uh, having that intimate knowledge of an insurance operating business and that relationship, I think is critical. And they can add so much value because of all of that, right? Which is why I think it's necessary to maintain those relationships and to support those relationships. But again, a captive is not should not be a solution looking for a problem, but a mechanism providing solutions to very real concerns. So again, that point, like know the why. What are we in this for, and what's the goal? And just because you mentioned it earlier, as we in the more administrative stuff and getting kicked off, always lead with the insurance discussion, right? Not the tax discussion. If that's the catalyst to the conversation about captives, then I would say, generally speaking, that's a red flag. Yeah.
You beat me to it, and we would be remiss without mentioning that. As you so well put, Joe, um, it has to be insurance first. There has to be, for everything we're doing, there has to be intention, and it has to be of substance. And what we're talking about is insurance. As I said, we're going to touch on tax. We kind of are going to have to, but most of it's here is that, if our intention is to, look for another place to find a tax deduction or find a place to put things from various different tax structures, then if that's the start of the conversation, that should be a little bit of a worry. I mean, all that to say, the tax code offers benefits, and we're not afraid of that. However, it's got to be insurance. It has to be an insurance discussion to keep everything above board. So,
Yeah, and just to finalize I guess this line of conversation here, I think when tax or estate planning becomes the primary driver, you really invite unnecessary complexity and scrutiny that I don't think will serve the operating business long term, right? And I think this further scrutiny is I mean, legitimately fueled by genuine abuse of captives being formed for tax and wealth transfer purposes for the wrong reasons, right? And not for insurance. So there are bad apples, bad actors out there, but again, it's important to find those trusted advisors and tune into their voices and let them help, guide insureds to the right options at their disposal. Say, hey, what can we do here? So yeah.
so well said. So well said. So well said, in fact, that we're going to lead this into our second polling question here. Let me get my polls going here. There we go. Launched. Sorry about that, folks. So as we kind of wait for these to roll in, what are some of the primary things, as we start to shift the conversation into how are people, as we shift from sort of the outside influences to perhaps what participants, clients, things like that are starting to think about captives. What are some of the things you see, some of the primary drivers at this point, or is it primarily sort of our old friend, the commercial insurance markets that are that are steering people this direction?
I don't think it's an either or answer. I think it's a both and. It's two things, right? Commercial
Right.
markets, what's happening there, and why, right? And also what's going on internally with the insurance operating business, right? So these two things and trying to find that right harmony between the two. And that's where, again, captives, I think, really come in and shine because they can offer those options that maybe there's a need of the insured that the commercial market is just not providing, right? They need certain coverages that just the commercial market won't just it's not available, right?
I'm gonna
Um,
provide.
that's one. The other thing I'll say is this, and I think the biggest driver since I've been on the MGA underwriting consulting side is this. You have some really sophisticated insureds who understand their operating businesses very well, and who control and manage their losses well and have for year over year. And they're looking as especially prior to renewals, 90, 120 days prior to renewals, start having conversations with their brokers, and the questions are being asked. Okay,
Yeah.
wait a minute. We feel like we've not had a lot of losses. We feel we see our premiums maybe changing or staying the same. What's going on here? We feel like I mean, my partner, Nate
Yeah.
Resnick, uses a lot. He says, many of our clients feel like they're just taking money and putting it in the corner of the room and burning it, year over year. So the question is how to participate in those underwriting profits. And that's
For sure.
I think that mindset of how do if you can't beat them, join them kind of thing. I think that's the
As we keep this going, I'm going to close the poll real quick, just because I think I've left it up for a while. And really, circling back to the initial part of your response there, where you said there's a lot of other coverages, a lot of other factors. Feel like that's reflected pretty well in this poll result here, right? Where other risks carries the weight of our responses. Unsurprisingly, property is next, because I feel like that's probably one of the most common that we see in captives, but really interesting results. And all that, now, if I may, let me recapture where you were with that, because I feel like you were on a good vein where we're talking about, what are some of these incentives? What are people looking for, and what are they going for? And one of the things that you were speaking about a lot is getting a share of the underwriting benefits, right? So, um, probably one of the most important things for our clients to be thinking about, and for folks who are considering captive insurance transactions to be thinking about, is that cost benefit, for how much cash outlay they're going to have to put into it. What is the potential reward? What is the potential opportunity? What's the gain there? And I feel like you really kind of captured that very, very effectively, where a lot of that underwriting benefit, for fear of sounding flippant, that's not the intent, but our clients have historically gotten a lot of coverage and gotten in return, a nice handshake and a box of donuts. So, this is an opportunity to try to move beyond that, right? Where we're almost sort of through the captive insurance markets, kind of move into commercial insurance 2.0 almost.
right.
But anyway, sort of setting that aside, it feels like, though, one of the things that really needs to be a consideration. I mean, obviously, the carrot at the end of that stick is what draws a lot of people to captives. But there's a lot of things they ought to be thinking about as well. A lot of things they should be thinking about themselves in approaching that. And it seems like, that loss history and sort of how insurance fits within their business model is critically important. What are your thoughts on that, Joe?
I mean, I really think that there's some initial questions that should always be asked, in the formation engagement, right? That should begin, I think, really by analyzing, again, we have it here on the slides, analyzing the risk universe and loss history across the enterprise, right? What's happening with the operating business? What risks does the insured have? How are they currently being financed and managed? Why have losses occurred? I think there's something that I heard that risk tolerance is subjective, but risk capacity is financial, right? So can you retain more risk? I mean, you
Oh,
might
that's
want to
good.
you might want to participate in that risk more, but really, can you financially? And again, just we have here for some other bullet points here. It's always important to remember that when you form a captive, you now own a licensed insured a licensed insurance company,
You own an
and that comes
insurance
with
company.
yeah,
Yeah.
exactly, that comes with its
Or at
own.
least a piece of one. Right.
That's it. Yep.
And as you say, depending on the level of impact, and we'll go into some of the various structures and all the options available a little bit later. But I mean that just can't be ignored, and it kind of ties in with where we sort of touched on the tax piece earlier, is that that intent to be a part of this, that intent to own an insurance company in the event of a pure captive, or be a participant in a group insurance, in a group captive. Very important, and what, in the group captive scenario, what is that group captive going to ask back from you, right? This is not like the commercial markets where you pay that premium and everybody goes on their merry way. There's a lot more involved there, and you have a new set of peers who you may or may not know. Although generally those tend to be, in similar lines or similar risks. But these are things to think about. If you go the full, say, pure captive ownership, what does that mean? All of a sudden, you have a subsidiary or an affiliate that is subject to regulatory exam every X number of years. And that should be taken seriously. I promise you, the regulators will be taking it seriously, and we should too, right?
Of course.
For fear of putting words in our friends' mouths, that's a very important thing to think about, that maybe sometimes doesn't get a lot of attention.
You're right. I mean, there's new operational responsibilities, right? Depending on the type of captive, that you own or participate in, or the structure. But again, new operational responsibilities, regulatory reporting, governance, capital requirements. These aren't bad things. It's just things to keep in mind, and real things to be aware of, right?
Absolutely, absolutely. And before we sort of move on to the next slide, I just feel like it's worth mentioning too that it's things require investment. It's going to require some skin in the game. And one of the things that's also important is, understanding your own capacity to fully participate, right? Because these are also not one and done solutions, right? You don't fund it once and then move along with life. This is a long-term game. This is a long-term play. And as we
Yeah.
sort of think about that, I think it is important for us to then sort of move into those considerations, right? I mean, we've touched on some of these in particular, particularly the sort of the cost benefit of it. Um, but as you were describing that regulatory effect, there's a lot more than just that to consider when it comes to this captive. And I would say probably one of the most important is, how do we define success or failure, right? How do we know this thing is working? How do we know it's doing what it's supposed to do? And that needs to be more than just getting a financial statement, an audited financial statement once a year, quarterly financial statements every quarter, right? I mean, how do we know this thing is achieving its desired objective, and outlining those parameters up front. Joe, I think you would probably agree that, we would hope that much of this is discussed as part of a feasibility study, things like that.
Formation. Yeah.
I mean, we would hope that that would sort of lay those out, but that feasibility study happened once, right? That's on the front end, and then how are we sort of judging ourselves as this captive? I sort of think of it in an insurance world. We love a naval reference, but you build the hull of a ship, but then you launch the ship, right? And when that ship leaves, when it first enters the water, it makes a big old mess at first sometimes, right? Where, I love those videos where it's, one sort of sliding off, from the dry dock into the wet. And, so that feasibility study, maybe it is reflective of what it is, or maybe we need to sort of reassess as this thing moves through time.
I mean, definitely, Scott. You mentioned earlier, I think it's imperative to define success like early on, right? When forming a captive, that is when you want to say, what does success look like? Is it solving a unit coverage need that is not, available in the market, as mentioned earlier? Is it managing and controlling claims better? Is it participating in underwriting profits so surplus can accrue year over year? All of the above. I mean, what's the catalyst for forming and operating an insurance subsidiary or insurance affiliate, right?
Right.
And then also, a timeline. We have it here, but what's the time frame? Is it crunch time because renewals are in less than 30 days and we're just trying to find a solution? And I want to highlight here, now that I've said that, because you mentioned it as well, Scott, captives should never be quote unquote sold, if you will, on pricing alone, right? Uh, these are long term. Um, this is a long term business decision that's supposed to further support your operating company, right? So because of that, there's going to be usually some upfront costs that I mean, it's going to cost some money. You have to your point, Scott. You have to have skin in the game, right?
Yeah, I
But
mean,
long
one of the
term,
questions we
yeah,
got was, what does it cost? And this question from Vic Incinelli, thanks for the question. Do all captives require use of an actuary? I mean, I think if you ask Joe and I, we would say yes. I mean,
yes,
obviously, there are some scenarios where that may not necessarily be the case, but these are things to think about too. Like there's a lot of new people and not a lot of new faces that enter your
right,
life with these
right.
things, right?
Well, let me answer that, and I might be very wrong about this, but to answer that question, yes, an actuary is always needed, and the reason being is because a captive is an insurance company, and insurance companies leverage the knowledge and both the art and the science, of actuarial experts I mean, to quantify losses, right? And then from there to build out premium and to confer with the commercial market on expenses and things of this nature. Again, because a captive is a bona fide insurance company, so you have to walk, talk, and act like a bona fide insurance company because you are, right?
Yeah.
And I'd have to say I'm not familiar with any scenario or instance where an actuary has not been a fundamental part of formation and ongoing operations of a captive company. I mean, for regulatory purposes, there's annual actuarial reports that are needed, right? For the feasibility studies or initial pro formas that are used to build feasibility studies, actuaries are all a part of this.
And they need to be, kind of getting back to the consideration, they need to be somebody you trust. You need to have a good working relationship with your actuary because when the chips are down and you are in that exam and you get some questions about potentially your premium or things like that, you're going to want them to be able to step up and answer the question. For us, we are going to be relying on their judgment and making that determination that, whatever premium has been charged as part of this captive makes sense. So, very much part. If we could just briefly touch on before we kind of move to the next poll, one of the greatest things I think you added into this was the exit strategy question. Because and I think that's kind of brilliant because throughout education, throughout our professional careers and things like that, we're taught how to start stuff all day long, but we don't get a lot of discussion on perhaps when it's time to draw something to a close. So I didn't know if you wanted to add a little bit there before we move on.
Well, well, thank you for that opportunity. And maybe taking a step back before the exit strategy, really more the question from formation to ongoing operations would be, how would an insured know when to pivot, right? From expanding, adding, removing lines of coverage to again closing the captive down if it's run, the course of its natural life cycle, right? So that exit strategy, I might also call it if it was around the times of the summer games, the Olympics, the art of the dismount, right? Like, okay, we're here now. How do we get off and land properly,
Yeah.
and safely? So I think the exit strategy, before launching or becoming a member of a captive is critical, and just to ask questions like, how difficult is Is it to place a captive in dormancy or runoff? What options are available for outstanding liabilities through novations or LPTs? How is, surplus and collateral, how are they handled when exiting or a captive or closing one down? And really, I mean, just when to balance and maybe again exit the captive and return to traditional risk transfer markets, right? Like that's the question. Like when would it make sense to do that? Again, kind of mentioned this earlier. Apologies for being redundant, but always keep in mind that captives are long-term tools, but they're still business decisions, right? So they're, just because you started it doesn't mean this is going to run forever. I mean, it might, right? It might morph into a traditional insurance company later on, right, and evolve into that. But yeah.
For you and I, forever's great, but understanding that it is about always about accomplishing the business's objectives. So yeah, great point. All right, let's move to our third poll here. Let me get that launched. There we go. Really I feel like this was the first polling question we wrote too. Is how long have you been thinking about it? And I think the cool thing here, Joe, is I don't know if you can see the results. I think you can, but so far around 50%. This is new territory. This is new ground. So that's really exciting, and we're really excited to be able to have this conversation early in your consideration process. So that's pretty cool. That's really cool. I keep going back to that exit strategy discussion we were just having, and really thinking about maybe it is a succession planning consideration, right? Is that we're really good at thinking about keeping something going as a going concern, and if this is something that's successful, and perhaps we're not ready for it to end. So how do we find someone? How do we find the talent to keep it going, to continue that captive program and continue down the road of that strategy? And I feel like that's something worth thinking about as well.
For sure. And I would say that might go into the governance conversation, right?
Sure. Sure.
How are we running this? Are we running this captive, based on our values and our goals, clearly defined values and goals, and as the captive continues to operate and again supports the business, what happens if this is actually going to remain in place for a number of decades? What can we do? How can we, bring in, others to be informed about what's happening and to educate them right early, so that they can take the helm, to use your naval, your ship analogy from
We love a
earlier. To
naval
say,
reference.
yeah.
Last call on the poll here. We'll give you just a few more seconds for those who need CPE. Looks like we're right about at that number, so I will close the poll and let's see what it looks like here. So again, looks like we're catching a lot of the audience at the right time, and for the 20% in a captive insurance transaction, I hope some of these things are really helping spur some continued conversations about how that's working, how that's going, things of that nature. So thanks to everyone for your participation. All right, we're kind of in the home stretch where we start to talk about the nitty gritty, Joe. When we start talking about what are the things that are available, options that are out there, and our goal in this really is to have a discussion about the fact that there are multiple solutions. There's more than one solution. A lot of the people that we've found are having these conversations may have a favored solution or kind of a go-to, but I think what we wanted to do is kind of shed some light on the good things that are out there. Understanding, as you so well put earlier, is that this consideration needs to go beyond price. It needs to go beyond price. It needs to be a focus on what's the right solution, what's the right fit And am I working with the right people? And am I working with the people that I think are holding that best interest
Yeah.
at heart?
Yeah, no, no, great points. And I think, the right fit. So the type of captive and structure is ultimately going to depend on the objectives, right? The things we spoke about earlier. What defines success? What's the goal? Know your why, all of that, right? And then to keep in mind that control and responsibility are proportional to each other. And I might elucidate that a little bit more here in a moment. When we get into exploring various structures and defining them. And just to keep in mind that the captives are here to complement, not replace, the traditional risk transfer market, right? Your insurance program is in place now.
Right.
And so I think, once insurers understand their goals and their risks, right? Then exploring various types of captives and potential structures are really where to begin. And if I may just continue to, for pure captives, you're going to get maximum control, but also maximum responsibility, right? With group captives, you get shared risk and collaboration, slightly less control, but they are definitely a great option for a number of insurers, depending on their premium levels and the type of business they're in and their risk appetite. For cell captives, I think cell captives are most often the most efficient entry point. And really, they do a good job of being right between, the pure captive with all the control and responsibility, and the group captive with the shared risk and collaboration, but a little less control. I think it's a good balance between, if that is for in the cell captive, a good balance between that control and responsibility. Um, Risk retention groups, RIGs. Yeah, just you. I think for this webinar, for those out there, just maybe consider them more carriers, traditional insurance entities, and they are also regulated as such, right? And that you can
Yeah.
write liability lines in them anyways. And so there's yeah, kind of
Yeah,
the
it's
core view.
a little bit of a 1 foot in, 1 foot out solution with RGs where, it is more like traditional insurance, but with some very captive elements to it. However, we've seen those be, some very effective solutions for a variety of interests. I know you and I have seen a lot of trucking RGs in particular. But your description is perfect there, and I actually wrote down your quote there is that control is proportional with responsibility. I might put that on the whiteboard, but um, and your description couldn't be more accurate. Where with pure captives, this is where our clients can really get dialed in, because it belongs entirely to them. And there's a variety of different structures for how that fits within an org chart that may make sense, right? There are many that go the wholly owned subsidiary route, that has, various sort of reporting implications. In many of those cases, what we have is a captive that from, taking a step back and looking at it from an organizational perspective, that captive is a part of the big picture for an entity, right? We've seen these also structured where they're sort of an affiliated company, and there's a variety of benefits and drawbacks in that case as well. Some of the benefits are that you do get a little bit of a separation there between the parent company or affiliated company and that captive, that can provide some different tax benefits. But also one of the benefits there is that you can use it to do other things. You can potentially more effectively use it to get to the reinsurance markets or things like that. Some of the drawbacks are, it becomes harder to include the good things you're doing in your captive in the big picture financial statement for your operating company. So, definitely some benefits there. I'm really starting to get into the accounting here on these, but but I feel like it's worthy of discussion. Group captives, as you so well put, you're joining in. It's kind of like getting your circle of buddies together to do insurance together, right? Some of the benefits are number one, it's got a lower barrier of entry. These are, they're a little bit easier to get into. There may be contractual language in place that says you have to stay in it for X period of time before you exit without penalty. So, I mean, they don't want people just sort of flippantly deciding to join these things. Um, but your peer group in that group captive is going to expect you to perform. They're going to expect you to manage your loss history effectively. They're going to expect you to, if you're in a high risk industry, become a better risk manager, right? I mean, it doesn't come for free, right? And so there's also some timing restrictions as well that can affect, how do you exit, getting back to your exit strategy. However, some of the benefits we've seen, in addition to just the low cost nature, and in addition to those risk sharing benefits, which should, in theory, be one of the primary drivers, um, in the long term strategy side of things, we've seen these as a great springboard for companies that are interested in either breaking off and creating their own cell company
Mhm.
or sell within a cell facility, right? Which is, a little the bit of the in between, say, a group captive and a pure captive, right? You've kind of got your own piece of a bigger captive structure. All of these things with, some very unique, benefits, drawbacks, things like that. And I guess sort of bringing it back to, what really started this whole thing is first, understanding, what are the things you're hearing about these, and what is the incentive to follow one path or another path. Also understanding, who am I speaking with when it comes to this, and ultimately, how does it relate back to making my company a better company?
Yeah, no, that's good, Scott. I would say uh, for in determining which type of captive, right, is right. Um, for an insured, I think it's an oversimplification, so I apologize to the audience. But think about the beginning, the middle, and the end, right? How do I get into this? What's the formation? What's the entrance into to membership? Um, what are the costs there? The middle, ongoing operations. What does that look like? What am I responsible for? What can I control? What can I not control? And then if I want to leave, what happens then? How quote unquote sticky is this? Or what are my options for exiting a group? What are my options for putting a cell or a pure captive into dormancy? Is that something that then we might actually pick back up as a tool later, right? So again, there's a lot of things to consider, but I think if insured's focus on starting at the right level of that control and responsibility, and not really over engineering that first step and kind of crawling before you walk, walking before you run, and really lay the groundwork and build from there. Then I think the captive will really be in a position to support the insurance program and parent company operations. So
Absolutely. Absolutely. And in dovetailing off that is I think you pretty much captured it, but just that continuing evaluation, that constant monitoring of, what am I doing? Why am I doing it? Is it doing what I want it to do? Right? I mean, it's been a funny presentation because I feel like we've started with the same questions we're asking here at the end, and the beauty of it is that's deliberate, right? Those questions of intention and what am I expecting to get out of this, um, we should constantly be a part of the process and
right,
constantly be a part of evaluating what we're doing, evaluating how long do we keep this going, why do we keep this going. So um,
and and just to jump in, I think all captives are going to require a regular cadence of evaluation, right?
right.
So you want to be looking at loss ratios, claims efficiency, the total cost of risk, the T4, capital performance, governance. And so, to your point, Scott, I would suggest for captives, whether it's a group captive, pure, cell, use the annual board meetings, right, that are required in so many domiciles. Use those annual board meetings and regular strategic reviews, right? And just to stay proactive and to keep asking those questions. Hey, why are we in this? What does success look like? Are we meeting those, are we hitting our marks here? If not, how do we pivot? If so, how do we still pivot? Because you don't want to continue to grow in different areas. And also, where are we with the sunset of this program? Or are we, is that horizon far out? So
Right.
yeah.
Great, great. I'm going to use that to transition to our fourth and final poll of this presentation. There we go. As we've got this poll up, we did get a question, Joe. And this is a fun one. We're really kind of getting into some of the details here, but I think it's interesting is regarding first dollar premium thresholds for various lines and where the captive conversation should perhaps begin. So, some of the commentary with this question is, would say a group or a cell captive have a lower entry point than say a pure captive, single parent captive? How does the ratio between how the captive may be taking some of that risk matter among various lines, right? So again, just as an example, say work comp versus auto. Uh, an interesting question for sure.
Yeah, an interesting question, and I think it is really going to be answered by number one, what's the structure of the cell that you want to that you want to start? What's the structure of the group, right? If these are the two options, and really more so, what's the risk appetite of the insured, right? So that first dollar, regardless of what line it is, are you already retaining some level of risk in a deductible, an SIR? And then from there, and are you comfortable with that? Has that negatively impacted your company financials, or is this something that you're continuously comfortable with? And then beyond that, where the captive begins to pick up, where is that? There's a very different, it's a different conversation when you're saying, okay, I have a $5,000 deductible now versus I have a $25,000 deductible now versus I have a $250,000 deductible, right? And depending on what line, obviously. So and then from there, what is the structure where the captive can step in? And then what are you willing, what additional capital are you willing to put at risk, to retain risk in that captive, but also again with the upside of benefiting from potential underwriting profits. And then from
Oh,
there, how does all of that, real quick, final thing, how does all of that help build the further insurance scaffolding in the excess layers, right? Where can the attachment points really begin to make sense for capital efficiency
sure.
purposes?
All of which is to say, that's a really good question, and you should talk to us after. Thank you for the question, Tanner. All right, I'm gonna give the poll just a couple more seconds because we're starting to draw towards the end of our time here. Just make sure everybody who does need CPE gets that last bite at the apple here. And I think I'm going to draw it to a close. And Joe, I think as we look at the results of this poll, it's not terribly surprising. I mean, I feel like this is consistent with what a lot of what we hear from our clients and various people when it comes to captive insurance. So with that, there's no current questions in our questions queue. So this is sort of your last shot there. We'd love to have them if you have any. Otherwise, we are at the end of our time. So I would say, Joe, first of all, thank you for being a part of this, and for everyone who attended. We are thankful that you spent your time with us today. So,
Yeah. Thanks again for joining us. And yeah, please reach out if we can be of any further assistance, because I know Scott and I both are happy to help.
all right. Well, believe that's it. Thank
All
you,
right.
everyone.
Cheers, all. Thank you.